What's up, everybody? Welcome to the meme market. My name is Corey, and today we did see the stock market climbing higher as we continue to climb to brand new all-time highs. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we did climb higher, going up 0.16%. Our price action is still well above that positive sloping 5 EMA, and we still do have that full bull trend. Notice that these moving averages are starting to create separation, so the bullish momentum is starting to pick up. Pretty soon the 5 EMA will be just below the price action, which should be just enough to start pushing us to our next price target and possibly even break above it. So look for that resistance level just above at 449. I also added another price target I want you to pay attention to, which is just above 451. So if we break above 449, you will want to look for resistance at 451, and above that, it does look like SPY will start running towards 460. Remember that typically speaking, September is a very volatile month, and we are reaching the end of August very soon, so you really do want to get more cautious the higher we go. This is definitely going to start triggering the FOMO, which is why you're starting to see some of those meme stocks starting to run. So don't fall for the FOMO, still make sure you're protecting yourself to the downside as we continue to climb higher. This bull trend is still very strong, but we're now starting to get to some of these price targets that could trigger a stock market correction, so just be cautious the higher we go. I always tell you the higher we go, the more risk there is in the stock market. So you want to be selling as the market goes higher and buying as the market goes lower. So obviously, because we're on that climb higher, start thinking about some of your exit strategies and where you're going to lock in those profits. To the downside on SPY, you're still looking for support at 446. The gap closed right around 443.8. And our 20 simple moving average, which is our strongest support level in this bull market, is going to be right around 443. So watch those critical support levels, and remember below SPY 443, we will look like we're rolling over yet again. Even though we still do constantly see buyers of the dip, you still want to give the respect to that support level, and if we close below it, you want to get a lot more cautious. On the NASDAQ 100 triple Qs, we were up 0.31% today, and the second day in a row of closing above the upper Bollinger Band. We're starting to see those Bollinger Bands expanding, which should allow for more volatility and more price action movement. Right now, watch that resistance level just above at 376 because that will be a very strong resistance level. To the downside, you still have support around 369 to 370 and the gap close right around 368.3. The strong support level is that 20 simple moving average, which is going to be right around 368. And if we close below 368, it will look like the market is rolling over yet again. So watch that critical support level closely. Right now, this is definitely a bull market that's picking up strength and picking up momentum. But if we do see price action slice through a critical support level, I want you to get more cautious immediately. So watch resistance at 376 and critical support at 368. On the Dow Jones, we were pretty flat on the day, only going up 0.08% and still closing above the 5 EMA and still holding on to the bull trend. The gap below will close right at critical support, which is our 20 simple moving average at 351.8. So watch that critical support level closely. Below that, we also have critical support at 351 and our 50 EMA right around 349. To the upside, look for resistance at 355, the previous all-time high just above 356, and our price target at 359. On the Russell 2000, we were up about 1% today, and we did see the Russell 2000 closing back over that 50 EMA. It's starting to look like the Russell 2000 is trying to reverse the bear trend, but we've been here before, and as you know now, this is not necessarily enough evidence. We do still see a lower high, and last time we closed above the 50 EMA for 2 days in a row, it was a false breakout and we went back into a bear market. So it's way too soon to say the Russell 2000 is breaking out of a bear market, even though we are seeing those small cap meme stocks starting to run. So right now, what I want you to watch for on the Russell 2000 is a daily close above about 224. That should be just enough to shake the Russell out of this bear market, and we could start climbing once and for all to our resistance levels at 227 and 230. However, as long as the Russell is below 224, I don't want you getting overly bullish. To the downside, you still have support at 221, our 20 simple moving average at 220, and our support level at 219. Don't forget about the gap close below at 216 if we do break below 219. On the ARKK ETF, we were up 1.32%, and we did close back above all the moving averages with the price action. We did open a gap below that'll close around 119.5, and we are starting to reverse the bearish trending, and we did prevent the 20 simple moving average from crossing below the 50 EMA. So overall, ARKK's price action is starting to look bullish, but we need to wait for that confirmation of the bull trend before we get overly bullish on the ARK ETF. To the upside, look for resistance at 123, 125.6, and 128. To the downside, you have critical support at 120, and below that, you're looking for the gap close at 116, with support levels at 115.5 and 113.8. On the VIX, we did climb slightly higher today, going up 0.29% on a day that we also saw SPY going higher as well. Remember, this is always going to be a warning sign because typically the VIX should go lower as the S&P 500 is going higher. So treat this warning sign with the respect that it deserves, because this could be an early warning sign that we're starting to see more volatility and more fear picking up in this market. We also did close at new all-time highs, so that could be the reason, but just stay cautious and watch the VIX. If we see the VIX spiking above 18.2 and getting above 20, that could trigger another stock market pullback and even possibly a correction. And in the case of a correction, we would see the VIX getting above 23 and closing above that level. So watch that price action. Otherwise, look for the VIX to continue to get crushed down, possibly closing the gap at 15.7 as we climb to brand new all-time highs. On Bitcoin, we're currently down just over 2.5%, and the price action is below the 5 EMA. We got extremely close to that price target at 51,000, and it does look like we're starting to pull back, but we still do have the bull trend, and it's still way too soon to say that we won't get to that price target. So watch that price target at 51,000, and remember, if we break above that, we could easily start running back into the 60,000s on Bitcoin and flirt with all-time highs. To the downside, you have critical support at that 20 simple moving average just above 46,000, and you still do have support at 45,000, and below that the 50 EMA at 42,000. So overall, Bitcoin still has the bull trend and the price action still above a positive sloping 20 simple moving average, so I still want you to remain bullish on Bitcoin at this time. On Amazon stock, we were up 1.22% today, and we continue to see this dead cat bouncing, which does tell us that it was thrown pretty hard at the floor. We did bounce off of that support level at 31.75, and we now have confirmation of the price action closing not only above the 5 EMA, but above the 13 EMA as well. We found resistance right where you would expect to find it at the next resistance level at 33.11, and we're just below that negative sloping 20 simple moving average at 33.28. Remember, to reverse the bear trend, which Amazon does find itself in a full bear trend, we need price action back above about 3,400, and then we could start talking about the gap close at 35.80. So overall, I want you to remember that this is still just a dead cat bounce, and we still do have a full bear trend. So we need to see Amazon getting back above 3,400 to say that this is no longer a dead cat bounce and it could start going into a bull market. We'll know it's a dead cat bounce if we get rejected at our 20 simple moving average and continue to head lower. So continue to watch for support at 32.80, 32.08, and then down here at 31.36. On Tesla stock, we were up 0.31% today, and we did close one of the two gaps, and we closed the gap at 714.5. The next gap is just above at 732, but we do have a resistance level that we need to break above right around 714. So look for Tesla to potentially go for that next gap close just above at 732, and if we start running, we could get to our price target at 765. We're very close to having the full bull trend yet again, so that should help push the price action towards our price target at 765. If we fail to break out, look for support right around 692 and the 50 EMA right around 676. If we break below the 50 EMA, look for the support trend line to hold up right around 670, and below that, it will start looking like Tesla is breaking down and losing the bull trend. So right now, Tesla still looks bullish, so I still want you to look at those price targets above at 732 and 765 until we break down below support at 676. On Apple stock, we were flat on the day, going down only 0.06%, and we still do have the full bull trend with the price action above the 5 EMA. So overall, Apple is still looking bullish, but we do need to break out above 151 to start running to our price target at 156. Look for strong support levels at 149, 147.5, and below that, it'll look like Apple is rolling over with support levels at 145 and 143. Below 143, look for the gap close at 137. On the financial sector, we still see bullish price action above the 5 EMA, and we still do have the full bull trend. The industrial sector is back above all the moving averages with the price action and trying to regain the bullish trend. The healthcare sector was down 0.35%, closing right on top of the 5 EMA, but still holding on to the strong bull trend. The energy sector was up 1.66% today, closing just below that 20 simple moving average and trying its best to get out of the bear market. We need to see the energy sector getting back over the 50 EMA to go back into a bull market. So jumping back over to the S&P 500, this is definitely getting into that territory of more risk as we reach these next price targets at 449 and 451. Watch those levels very closely because, as I always tell you, my price targets I give you could lead to a stock market pullback or even a stock market correction. Don't forget we have the gap to fill below. If you do start to see weakness in the market, look for potential support at that level. We still have a bull trend and we still have bullish price action. So if you're remaining objective, you still need to be a bull in this bull market. Also remember that I have my own trade alert service that only trades TQQQs called BANC Trade Alerts. I'm running a 50% off promo code for your first month. So now is the best time to try it out. And it does very well in all market conditions. If you're interested in checking out BANC Trade Alerts, you can find out all of the details on how to join in the description below. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this market and stay on the right side of the trade. If you're interested in joining the Stocks Channel Discord community, you can find out how to join by clicking on the link in the description. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.